Recording a business transaction is at the heart of accounting, and especially in regards to recording a business transaction is what's called journalizing a transaction or recording a general journal entry. That is going to be the heart of accounting, and we're going to learn how to record journal entries for many different transactions throughout this course. So the more you can practice with journal entries, the better. And so what I'm going to do is we're going to go through a process here of a four-step process of recording a business transaction and journal entry that you can use for any business transaction to help you to journalize a transaction. So I'm going to start with step one, and this comes from our presentation for chapter 4 this week. And step one of recording a business transaction is to analyze the financial event. We're going to read through it and look at what event happened, and we're going to identify the accounts affected. Every accounting transaction must have at least 2 accounts involved. It's a double entry system, so there's always at least 2 accounts affected. And each of those accounts are classified as either an asset, liability, equity, revenue, expense account. And how they are classified helps us determine how to journalize the transaction. So once we know what type of account they are, we can determine the amount of increase or decrease for each account affected, and then we can apply the rules of debit and credit. So I'm going to go ahead and jump over to an accounting transaction example here. There are several in this presentation here. There's some great examples. So the more you can go through these examples, the better. And if you can go through the examples and start out and try and do them on your own and then click through and see if your answer is correct, that's the best way to learn how to do journal entries. So let's look at a cash purchase of equipment here. On November 7th, Eli's Consulting Services issued a check for check number 1001 for $5,000 to purchase a computer and other equipment. If you remember from our steps to recording a business transaction, our first step is to analyze the event here. And that's further broken down to determining which 2 accounts are involved, or 2 or more accounts are involved here. So if you look at this, we issued a check 1001 for $5,000. That means that cash is involved in here. Checks are considered same as cash in accounting. And so cash is going to be one of our accounts we have here. And then our other account, we are purchasing a computer and equipment. So our other account is going to be our equipment. Those are our 2 accounts. Keep in mind that if you are paying cash, the wording of the transaction will say you're paying cash or paying for. It might have a check number in there. That all means is paid in cash. If you receive money or received it, those are keywords that you are receiving cash. If something is purchased on account, that would be accounts payable. It will tell you it was purchased on account. Or if you received money on account, like you received money for payment for an account receivable, it will use the word account. So if you just see the words paid or received, it almost always is cash. So just some keywords there. So this case, we have cash and equipment. Now we are paying out a check. So a check means it's going down. I'm going to go ahead and move over back to our slide here. And we identified the accounts. The next step is to classify the accounts. So we said we had cash and computer equipment. Cash is an asset, and so is equipment. Because remember, assets are things you own. And so both of those are actually assets. So we have classified those accounts as assets and determine the amount of increase or decrease for each of those. In this case, our cash is going down because we are paying cash. We're writing a check. It is going down. Whereas our computer equipment is going up. So it's an increase. So that gets us ready to apply the rules of debit and credit. Now what I'm going to do though is I'm going to go over to a handout that I had in chapter 2, which is a debit and credit rules handout in case you want to refer back to it. And this I call kind of a cheat sheet to use when you're journalizing. And it's got the accounting equation up top here, and it has each of the different accounts, what their debit and credit rules are. And so these are both assets. And so an asset, when it goes up, is a debit, and when it goes down is a credit. So our cash was going down, but our equipment is going up. So our cash is going to be a credit, and our equipment is going to be our debit. So for accounting, it's double entry. Our debits always have to equal our credits, and our accounting equation always stays in balance. So since they're both assets, we have a debit to the equipment and a credit to cash. We're in balance because they offset each other. One goes up, the other goes down. We're in balance in our equation here. So I'm going to go ahead and go back to our example here. Actually, we'll go back to our steps. We've already gone through step 1. We are on step 2. And we talked about which account is debited. It's going to be the equipment for the $5,000. And then the credit is to the cash for the $5,000. Next, you can, if you want to, make the entry in a T account form. That can help you to analyze it. That's kind of what we did on that debit and credit handout. And then we're going to go ahead and record it. So let me get back to these are our T accounts. So you could kind of, on pen and paper, you could kind of write to yourself, okay, I'm going to have a credit on the asset side of $5,000 and a debit of $5,000. Again, a lot of accounting, you should have some scratch paper to write down notes. These are all steps to get us to that official journal entry. The official journal entry is what you write down. Okay, so let's go ahead and go over to the journal entry itself. And for that, I'm going to show you a template I have here. This is presented in our class in week 3. There's a template if you want to use it, and you can write down your journal entries on this template, or you can always do journal entries by hand with handwriting as well. When you're practicing, you're practicing. It doesn't have to be quite as official when you're practicing, but when you are officially, writing things in a journal, it would look similar to this. And you start with a date. So let me go back to our transaction, which was the cash purchase of equipment. And you'll see, before we get to writing it down, we were on November 7th. So that's going to be our date. And we already determined that, so here's our date in the date column of a journal. And we already determined that we were going to debit the equipment. Debits are always presented first in a general journal. So write your equipment first. And then our credit is to cash. And you'll notice cash is indented just a little bit here. And then you write the credit in the credit column here. And then most journal entries, you have a room here for just a little description. This is very unofficial. It's just kind of something to remind you, what you're recording. So you could say purchased equipment for a check number 1001. Again, this is unofficial. It's a note to kind of help you if you were to go back to that journal entry to jog your memory. Oh yeah, that's what we were doing there. So that is your entry. This post reference column is for a later step where we post to the general ledger. But quickly, I will let you know, once you've posted it to the general ledger, you put the account number in there. So we went over chart of accounts in a previous chapter where we gave each account, or each account, a number. And the number for equipment is what we would put here once we have posted this to our general ledger. That is a later topic here, but journaling is, again, the heart of accounting. Posting those journal entries nowadays is mostly done by a computer. You'll get a chance to do some of that by hand in this chapter, but a computer, that's what's nice in saving time with a computer. You record the journal entry, and then the computer posts it to those accounts and keeps those balances up to date for us and does a lot of the math for us. All right, so that is our journal entry example there. I'm just going to quickly move back to our journal template again. You would fill in the date here. Again, you don't have to be perfect about it, but the general idea is that you are doing the debit first. So in this case was actually the equipment. Spelled that wrong. And then the credit was to cash, and you just indented a little, 3 or 5 spaces. And our debit was for $5,000. Our credit was for $5,000. And then you could put a little note down here, purchased equipment for cash, something like that, or for check number 1001, that kind of thing. And then once you posted it to the T account or the ledgers, you would put that account number there. You don't fill that in until actually after you've done your journal entries and then you post. So that's a later step. But that's how you would record these. So I highly suggest you go through the presentation this week and go through the examples and try some of them on your own. And then also in the discussion, you get the chance to describe an entry of your own. Feel free to pick any type of transaction. Just if you see people covering a lot of the same transaction, try and pick a different one. And so thank you for all of your hard work, and let me know if you have any questions as we go through the material.